This is the Asia Trade. I'm Annabelle Drawlers in Hong Kong.
I'm Shery in Tokyo. Asian stocks set for declines as the S&P 500 wipes out its gains for October amid signs of investor exhaustion ahead of the U.S. election and Fed decision. Treasuries see their biggest monthly loss in 2 years. Tech's mixed earnings season continues. Apple slipping after the bell on weak China sales, but Amazon and Intel gaining on bullish outlooks. And Donald Trump claiming he's the clear frontrunner in the election race, while Kamala Harris goes on the attack over his views on women.
Well, Shery, we're all about tech in late trade today. Lots of numbers coming out after the bell, but that focus very much on Intel. We've just been hearing from the CEO, Pat Gelsinger, talking about this aggressive, ambitious restructuring plan. Successive quarters of weakness. Finally, perhaps we've started to see that payoff coming through. So that stock up as much as 12% in late trade. We'll have more in just a moment. Apple, of course, another big watch for us. Headline, it was actually good numbers for the company, but the concern very much, as you said, how is China doing? Because this is clearly a market where it produces the majority of its smartphones, but it's also a market where it's facing a lot of competition from the likes of Huawei, for instance, Xiaomi, that are really catering to the local consumer. So we're seeing that stock slipping. Amazon as well, another one very interesting to track because, again, it's facing competition from Chinese companies. You've got the likes of Shein, Temu, TikTok Shop. These are all trying to compete for those international buyers. But it actually forecasts a strong holiday quarter. And again, another interesting point, strong demand for its cloud services. So these are really the focus. And of course, we're going to have a lot in the program today. But the Intel CEO, Pat Gelsinger, saying the company had a challenging third quarter, although it saw good operational results. He told us more about Intel's restructuring and the outlook for its AI accelerator.
We worked very hard this quarter to get this done. And the people actions, the restructuring charges, largely finished this quarter. So it was a challenging quarter that way. But to also deliver better than expected results if we eliminate those one-time charges and to take our guidance up for Q4, I'm very proud of our team being able to do both of those this quarter. Some of the most difficult restructuring charges maybe in the history of Intel since our memory microprocessor decision almost 40 years ago. Getting that done and still beating results and taking the guide up. This was a very significant quarter for our team to execute.
Your AI accelerator did not get the traction that you'd hoped, and you won't be making the outline target of $500 million in sales for this fiscal year or calendar year. Why? Is it a use case issue that the data center operators aren't looking at it, or something else?
Yeah, two factors that we pointed out. One is that now we have Gaudi 3 coming out, so there's more enthusiasm for the next generation product that we're just starting to ramp now. The second one is the software. And the software use cases, the AI world has moved very rapidly and innovating very quickly. And the robustness and the completeness of the Gaudi software stack hasn't been as great. And it's an accelerator, not a full reprogrammable GPU. So that makes some of the software porting and optimizations a bit more difficult. Obviously, as we get more of that running on Gaudi, we solve the software problems. Okay. But secondly, then it's also to move to a complete GPU capability, which we'll be doing out in time. And that development effort is also well underway. So we feel we have a solid position.
Intel CEO Pat Gelsinger there speaking with Bloomberg technology co-anchor Ed Ludlow. Of course, Intel, we had profit and revenue outlook for this quarter beating estimates. And really a little bit of a different picture when it comes to Apple, though, and the session in the after-hours trading, because Apple sales in China remaining a weak spot in a mostly solid quarter. So we had Intel gaining ground, Amazon also gaining ground, Amazon seeing strong revenue and profit ahead in the holiday shopping season. Our senior executive editor in technology, Tom Giles, and e-commerce reporter Spencer Soper are joining us for more. And Tom, let's start with you because we just heard from Pat Gelsinger in Intel. How much of the challenges that he's facing right now really reflect the broader major shift in the semiconductor industry and this focus on AI?
Right now, if you cannot point to specific chips that are going to help fuel the AI revolution, you're going to get left behind. You're going to get left behind by the likes of NVIDIA, the likes of TSMC right there in Asia. And right now, Intel doesn't have that compelling product. Ed talked about this in his conversation with Pat Gelsinger. The idea that they're not going to meet that $500 million threshold, that there's not the uptake for their AI chip, their AI project as they had hoped. They have signed a couple of customers, particularly Amazon is particularly encouraging. They're going to work together on this project. But this is very, very early days. And right now, Pat Gelsinger can't point to big, significant wins and uptake for those chips. And so in the meantime, they're gonna fall. They risk falling further behind.
So, Tom, do you think then, in terms of the restructuring, are we through the worst at this point, or do you think still that chatter, for instance, of breaking up and spinning off certain divisions continues to persist?
Mm-hmm. So Pat Gelsinger is trying to reconfigure what Intel is. It's a smaller, he's trying to make it a more nimble version of its past self. They really have to find growth in artificial intelligence. They've really got to rethink who they are as a company. They're trying to build this foundry business. That is where they will actually manufacture the chips themselves, like TSMC does right there in Taiwan. That's still a couple of years off. And even at the outset, they're going to be manufacturing chips for themselves. What they want to do is get to a place where they're manufacturing chips for a broad range of customers. So Intel needs to become a different company. They need to become an AI company. They need to become a foundry business. That's still so far away that in the meantime, in the near term, they do remain vulnerable. We've reported on potential interest from the likes of Qualcomm. We also came back and said that Qualcomm is going to take another look at them after the election, after the dust settles from this pivotal event that's about to descend on the U.S. in a couple of days. Once that's over, we'll see whether the stock price remains under pressure. A bit of a relief rally today, but can it be sustained? And the way that Pat's going to sustain that is by showing that he's making progress in foundry, that he's making progress in AI, that he's signing up customers, that he's showing that this product is something that's viable and that's something that people want. And again, is it going to play a role in fueling the AI revolution the way NVIDIA's chips are?
And Spencer, we are seeing that renewed focus on AI coming from Amazon as well, right? Lots of investments, construction of data centers and so forth.
Yeah, Amazon had a good print, and on the call, the CEO is really bullish on artificial intelligence and the opportunities it presents for Amazon. And it seems like investors are embracing that more, knowing that Amazon, even if it's not necessarily ahead on the the tools that people are using, it's still kind of in the background and providing the infrastructure for a lot of for this wave to come forward. So yeah, there was a lot of talk about that. They even mentioned that they've spent about $75 billion this year, and the CEO Andy Jassy hinted they're going to spend even more next year, and he called the artificial intelligence wave like a once-in-a-lifetime opportunity. So basically just trying to get investors excited about the opportunities that artificial intelligence presents for Amazon, similar to the way they've been excited about cloud computing.
The read-through on both of the earnings, Apple and Amazon as well, was also the China consumer. And here they're sort of seem to be faring a little bit differently. But what do we learn about how Amazon is managing to fend off the likes of Shein, Temu, TikTok Shop in these latest earnings?
Yeah, I mean, the big thing there is they didn't even come up. Analysts didn't even ask about it. Their revenue growth is a healthy 10% on a very big number. So their online e-commerce business is doing quite well, and they're emphasizing speed. They're saying, look, we are doing things that these Chinese upstarts have not been able to do, which is get stuff to people faster and faster and faster. We're getting some things to them the next day, and a lot of things even the very same day that they ordered it. And that's that's the moat that Amazon's building around itself. And they're saying as they do that and add more and more items that are available for same day and next day delivery, that their customers become that much more sticky and buy even more from them.
So, Tom, what's happening with Apple in China?
Yeah, I really want to focus on that. In China, they had another sales decline in the most recent quarter, didn't meet estimates. You have a really competitive environment in China with the likes of Oppo and Vivo and Huawei, those devices gaining traction. And also this question politically about whether people in China want to buy Apple products. You have an escalating trade war between the U.S. and China. We're on the cusp of an election where we're going to see one way or another. One of the candidates wants to erect huge trade barriers with China. If that happens, how does China respond to the U.S. and how do Chinese individuals and consumers respond to a country that wants to make it really, really hard for them to export goods into the U.S.? Do they respond by making it harder, or just not being all that interested in buying Apple products there? That's a big question mark right now. And again, you've got those players right there at home that are making phones that people in China want to buy. So how does Apple retain its luster in a country that might have a different idea about buying Apple products? They're just not the shiny new object that they were for such a long time.
Our senior executive editor Tom Giles and e-commerce reporter Spencer Soper there with the latest on tech earnings. Let's bring in our next guest, who says the Magnificent Seven versus the rest of the market, their earnings delivery differential has been narrowing in the past quarters. With us now is Elfreda Jonker, client portfolio manager and the investment specialist at Alphinity Investment Management. It's great to have you with us, Elfreda, and of course this coming at a time when we got those more disappointing outlooks when it came to Meta and Microsoft as well. Yet when it comes to your top picks, Apple is one of them for you.
Yes, if you look at the results from the start of the reporting season up to now, it has really been a bit of a mixed reporting season overall for all the tech stocks. If you think back at the start, we had a few misses, something like a Cadence came through with a good result. This morning, Microsoft as well as Apple probably a little bit below what the market was hoping for. You've discussed China, but also I think it's all about the outlook statements. I think the key point to make here is that these tech giants are still coming through with really, really strong earnings growth and strong revenue growth. The shock and awe of the AI trade is just probably over now. They are not surprising by 30-40% anymore as they did before. So yes, they've done a great job, and yes, some of the areas are still doing very well. Particularly some of the businesses like Microsoft has got a range of different businesses that they can generate revenue from in AI. But we have started to see a little bit of capacity constraint and also impacting particularly on the cloud business side. But taking that all into account, majority of what the market is focused on is really the outlook statement. And that is where Amazon as well as Alphabet has come out with probably better than expected guidance for the next quarter. And then Apple, where they generally generate 35% of total financial year sales in the fourth quarter, that was a little bit softer. And if you take that into account with just releasing their Apple Intelligence, there are a number of questions that we need to work through and understand how long this sort of is it the shorter term problem, or is there a little bit more in this later on? So yes, we will be taking it into account. We have been taking profits in this area over the last sort of year to date. We've taken a lot of profit out of NVIDIA, Microsoft, Alphabet. So it's not the huge position that it used to be, but we still believe there is space for it in the portfolio.
So then how are you thinking about your framing around this? Are you still looking at sort of the picks and shovels? I noticed you said capacity constraint, and that makes me think of Microsoft, for instance, this week. Are you still in that part of it, or are you going more into the application side instead?
Yes, I think if you take a look back at what we saw during the internet phase, it was very much semiconductors first, then infrastructure, then you have the software and services at the top. So we definitely have been exposed to sort of all three of those different stages. But now we do believe that, it's probably worthwhile having a player in each of those games, but not have two or three players in each of those different stages. So where we at is probably more adding to the infrastructure side. So as I've mentioned, Apple sits right there in the middle with their devices, but also something like Microsoft can still play in the sort of software and services that sits on top, as well as Amazon and Alphabet. So that is what we are currently looking for. We're looking for companies that can generate revenues out of each of those different phases. And NVIDIA, the reason why we keep on holding it, and we have been cutting back quite a bit given the valuation expansion, but if you look at the capital that these big mega hyperscalers are spending, we've heard earlier that they will just continue to spend even more next year. That's very positive for NVIDIA. We just need to understand exactly what's going on with capacity. So far, all the news that we've heard from Jensen has been that there's a massive demand for the new Blackwell chips. We will be doing a lot of work. Our analysts have been on the ground doing trips, understanding that sort of back end to get a better sense of the capacity. For now, we don't think it is a huge problem, but we could potentially see, not just for NVIDIA, but also for the likes of Microsoft, that some of those revenues could be postponed a little bit into next year rather than into the fourth quarter this year. So a bit of a delay potentially for some of these revenue generating companies.
Elfreda Jonker, good to have you with us from Alphinity Investment Management. She'll be staying with us because we want to discuss the broader markets as well. You can see right now NASDAQ futures gaining ground on those tech giants' earnings late session today. But in the regular session on Wall Street, we actually had U.S. stocks falling. So we're talking about the first monthly loss for the S&P 500 in October in about 6 months. So S&P futures right now not doing much, but it was really about the reaction to the expectation being recalculated about the Fed's aggressive easing. We had more solid data overnight. The Fed's preferred gauge of underlying inflation seeing its biggest gain since April. So you have more bets being pared back of aggressive easing at the Fed. This ahead of the jobs report on Friday as well. This ahead of the U.S. elections. This ahead of the FOMC next week as well. So a lot for investors to keep in mind. Treasuries also seeing the worst month since 2022. So we're actually seeing yields gain by at least 50 basis points throughout. The dollar also surged in the month of October. On the other side of that trade, we have the Japanese yen under pressure, but overnight we actually have those gains that took the yen up about 1% at one point. This to do, of course, with the BOJ rate decision. Nothing happened on the rate side, but Governor Ueda actually in his comments during his presser talked about the fact that political uncertainty here in Japan wouldn't really stop him from hiking rates more if needed, if the outlook remains constant as it's going right now. Nikkei futures not doing much, but we're seeing the ASX 200 lose about 0.9%. We have more ahead on the Asia trade. This is Bloomberg. We're seeing more signs of economic strength in the U.S., leading to really those Treasury yields rising at least 50 basis points during the whole of October. And this is the latest data point that we watched because we had core PCE prices rising 0.3% in September, and that was the biggest monthly gain since April. We had consumer spending accelerating. We had wages and salary growth. And, of course, we're headed towards that jobs report on Friday. What caught my eye, though, the saving rate, though, fell to 4.6%. That was the lowest since 2023. Let's bring in our next guest who says a soft landing looks in place for the U.S. With us now is Elfreda Jonker, client portfolio manager and investment specialist at Alphinity Investment Management. Great to have you with us. Thank you so much for sticking around, Elfreda. I'm a little bit concerned about the savings rate because when we talked about the broader markets, we always thought there was a little bit of buffer despite the downside and the pressure that we could see from uncertainty in politics, geopolitics, and so forth. Is this going to be an issue going forward for the U.S. markets?
Yes, I think what you have seen currently, clearly the data points coming through, like the GDP growth rate, even just the consumer numbers yesterday, consumer spending, even housing started to come through actually a little bit better than expected. So what we are seeing overall for the economy is probably an economy that's doing okay. And that's why we are not expecting that a hard landing or a recession, but a softer landing. I think the important thing to point out here is that the interest rate market is clearly not necessarily believing the interest rate cutting cycle that the market is sort of forecasting at the moment. And that could be a very important point to look out for. So on the consumer and the saving rate, yes, that is something that we do watch. I think the saving rate relative to where we've come from and relative to other countries in the US is actually still relatively okay. But from a consumer spending perspective, we have been pretty cautious on the consumer overall. And even in the current reporting season, what you are seeing is quite a bifurcated market where the lower end is definitely still struggling. Dollar stores not necessarily doing well. You continue to see the down trading happening, eating at home, those sort of things. But then on the upper end, you have segments that is doing quite well. So that sort of higher end consumer. But on the other hand, you also have luxury really struggling on the back of a weaker China. So for the US economy itself, for us, the important thing really to understand here is what is happening to inflation and what's happening to the interest rate outlook statement and interest rate outlook in general. Because if we do get a Trump win, for example, huge tariffs necessarily doesn't mean a positive outlook for the economy or for the interest rate outlook. So there's a lot that you currently need to bear in mind when you think about the macro outlook.
And Elfreda, I mean, I think to your point around the luxury end and that China risk, I mean, Estee Lauder was a perfect example of that overnight, the biggest drop ever really for the company after they withdrew their China guidance. But you speak about sort of that rally perhaps broadening out. How are you thinking about positioning then, given we do have that risk of rates staying elevated going into 2025 if Trump does indeed return to the White House?
Yes, so what we have been seeing of late is definitely sort of a resurgence of some of the sectors that's actually been in a deep recession over the last 2 years. So if you think back, over the last 2 years, we've actually been in an earnings upgrade cycle for the overall market. We've had, consecutive months of the market running more so than what we've had for many, many years. But you have actually seen that sort of underlying earnings trajectory. It's been 18 months of positive earnings, but what we have seen of late is that sort of starting to falter. It's still positive, but not nearly as good as we want to see. And you have seen the broadening out from just tech stocks driving performance and earnings. And where we are focusing is on those sectors, for example, financials, that's starting to see earnings growth come through, particularly capital markets opening up. So we have been tilting towards sectors such as financials, where we've bought Morgan Stanley. Yes?
Unfortunately, got to leave it there, but that was Elfreda Jonker, Client Portfolio Manager at Alphinity Investment Management. We'll have more ahead. This is Bloomberg. You're watching the Asia trade. Big focus on tech in late trade today, given we've got all of these earnings coming through. Lots to focus on, but we'll kick off with Apple here because we're seeing that stock slipping in late trade. Now, what's happened is that the company, yes, they actually saw sales beating on a top-line level, but drilling down. It was the big focus on how they're doing in the Chinese market because they're facing a lot of competition there from local players, the likes of Xiaomi, Oppo, Huawei as well, that are starting to eat into their market share. So that really came through in what we're seeing here in that trade and reaction. Amazon, of course, another big focus for us. They're actually forecasting a strong holiday quarter. And on top of that, they're seeing strong demand for AWS. So cloud computing, the demand for that, it stays strong. Intel, meanwhile, you can see that big jump here in late trade. This is a company we know, Shery, it's on a very aggressive restructuring effort. Lots of pain for the business over the past few quarters. Finally, we start to see a little bit of optimism coming through.
Yeah, we actually heard from the Intel CEO, Pat Gelsinger. He's saying that the uptake of their AI accelerator has been slower than hoped due to software issues. He told us more about what he calls the most audacious rebuilding plan in corporate history.
We worked very hard this quarter to get this done, and the people actions, the restructuring charges, largely finished this quarter. So it was a challenging quarter that way, but to also deliver better than expected results if we eliminate those one-time charges, and to take our guidance up for Q4. I'm very proud of our team being able to do both of those this quarter. Some of the most difficult restructuring charges maybe in the history of Intel since our memory microprocessor decision almost 40 years ago. Getting that done and still beating results and taking the guide up. This was a very significant quarter for our team to execute.
Away from sort of the financials and numbers, could you talk a little bit about the product business and the foundry business that gave you some confidence in that guide?
Yeah, and if we take it apart a little bit, the client business, we've launched our Lunar Lake product, the second generation of our AI PC. And the AI PC category, very solid. We'll be launching the commercial version of that into a good market, we believe, next year for a Windows refresh, a corporate refresh cycle, and we start to see more strength in the AI PC category overall with strong set of use cases and ISVs bringing new software into the marketplace. So we feel good about the client business. Data center, quarter on quarter, a little bit better than people forecast for that business, and a stronger product line with our Xeon 6 products now starting to ramp. And finally, on the Intel Foundry, quarter-on-quarter growth in that area, and a strong pipeline of external customers. We announced Amazon and 2 other 18A customers, some additional advanced packaging customers. So we're starting to see that business come to life.
Your AI accelerator did not get the traction that you'd hoped, and you won't be making the outline target of $500 million in sales for this fiscal year or calendar year. Why? Is it a use case issue that the data center operators aren't looking at it, or something else?
Yeah, 2 factors that we pointed out. One is that now we have Gaudi 3 coming out, so there's more enthusiasm for the next generation product that we're just starting to ramp now. The second one is the software. And the software use cases, the AI world has moved very rapidly and innovating very quickly. And the robustness and the completeness of the Gaudi software stack hasn't been as great. And it's an accelerator, not a full reprogrammable GPU. So that makes some of the software porting and optimizations a bit more difficult. Obviously, as we get more of that running on Gaudi, we solve the software problems. Okay. But secondly, then it's also to move to a complete GPU capability, which we'll be doing out in time. And that development effort is also well underway. So we feel we have a solid position. And obviously, there's been rumors and churn in the industry. And I think all of that just indicates how important Intel is to the into the industry structure and semiconductors, and how important those supply chains are, for the world. We don't view any of these rumors as particularly meritorious. We, laid out a strategy. We reaffirmed that with our board of directors, and obviously, as we've taken these steps this quarter and restructuring and getting our costs where they need to be, we have the capacity to go on the journey that we've laid out, to produce sustainable profitability and result in shareholder return.
That was the Intel CEO, Pat Gelsinger, speaking with Bloomberg Technology co-anchor Ed Ludlow. And let's bring in Maribel Lopez, founder and principal analyst at tech consulting firm Lopez Research. And Maribel, we can kick off with Intel. I'm curious for your reaction on the share price today, because is it telling you that investors are really believing that that turnaround plan is taking shape, or is it more just relief and a relief rally that's coming through that the numbers weren't as bad as what we'd seen in last quarters?
I think the turnaround plan was quite clear from the start. There was obviously a significant issue with the turnaround plan last quarter that really put into question the ability for them to execute this quarter. We actually saw some really strong guidance around what's going to happen with the AI PC, which is really important to them in a very competitive market for Intel. We also saw wonderful news from AWS on the Foundry bid. And if you look at a company like AWS investing in Intel from the Foundry business, that actually says that they've done some testing and they have confidence that that Foundry business could work for them. But I think if you put those two things together, you're starting to see a path where there could be a return of Intel into the market in a more meaningful way. So less distressing news, more optimism about the future opportunities Intel has over the coming 3 years.
And which part are you sort of more optimistic about? Because we just heard there about the outlook for Gaudi 3, for instance. Is it on that side, or is it more on the foundry side, do you think?
So I think the foundry side is actually incredibly important for Intel because it's really a new revenue stream. I think what we're seeing in the GPU market is that's a very difficult market to wrestle away from NVIDIA. The opportunity there, of course, is if we look at the longer game, which is in, say, at least a year or more, what we're seeing is that enterprise buyers don't necessarily need GPUs for everything. They need a mix of CPUs and GPUs, and this is where Intel has the opportunity to enter into the market strong when the buying actually starts to happen. We're all discussing the AI market as if it is here today, and we're really at the very beginning of it. We have product, we have use cases, but enterprise buyers have been slow to adopt. We've seen a lot of activity in the data center, but the data center is only part of the market. So what we're expecting, what we're optimistic about, is that Intel can come in on the back half and grab some of that enterprise buying that will be coming up in the next, say, year.
And Maribel, Apple, of course, also very much focused on Apple Intelligence, but we thought that perhaps a slow rollout of that feature would actually not lead to a lot of boost for the iPhone space. But were you surprised at what you saw in the September quarter?
I think in a lot of ways, Apple continually pulls a rabbit out of the hat. Just when you think iPhone sales are going to be fundamentally down and uninteresting, they come back and they show growth. We did see a bit more weakness in the Chinese market than we thought we would. I think there was an expectation that there would be a big pushback to growth. I actually think the Apple Intelligence side, people overplay that in terms of when the features come out. The things that people really care about with Apple are that they're going to have a better user experience, that they're going to have great cameras, great battery life, all the things that typically sell smartphones, and to continue to have, in the higher digit growth in the smartphone market is actually quite a feat to continue to maintain. So I think we're all very surprised and optimistic about where that was. And the services business is actually quite interesting for Apple as well. And that seems to be progressing at a good rate.
Maribel, what do you think about the China market in particular? Because it was really clear, as you said, that they're facing weaker demand there. Do you think that Apple needs to make a product that's specific for the mainland market? And if so, how would that look to you?
I think that's absolutely not in the cards for Apple. Apple tends to try to make a more ubiquitous, high-end, mid-range, potentially low-end. You could see that over time they've played those three tiers. But fundamentally different products aren't extremely scalable for Apple. If anything, I think they try to lean in and do more in India. It is going to be an extremely competitive market in China. We expect that to continue. But over the course of time, I think Apple will have a very solid showing in the Chinese market. I think everybody is very interested in seeing how well Huawei's high-end flagship products perform, but they're very expensive products. And if you look at a mass market appeal, we see the opportunity for Apple to actually go head-to-head and do fairly well in the space moving forward.
And Maribel, of course, we've been getting a lot of tech earnings, including Microsoft, Meta, also sort of disappointing when it comes to the outlook. What do you make of the broader trend right now when it comes to AI really impacting these tech companies' CapEx, future earnings, and just business performance going forward?
So there's a bit of a disconnect and disillusionment between what people expected to happen with the AI market and where we actually are in the AI market. So one of the things that we see happening is there has been strong revenue, but there continues to be heavy capital investment that has to happen in this market and will continue because we're not even at the point where we're seeing significant AI demand from enterprise customers. Once that happens and we see more workloads going to the cloud, that actually does continue to equal more expense. So I think what the cloud computing providers are trying to say is, hey, we continue to put out double digit in the 20s, in the 30% growth, which is phenomenal when you consider the run. All of that growth is being driven by AI right now, but there's a cost that's associated with that. And they want to try to temper expectations of what the earnings might look like or what the capital portfolio might look like moving forward, because that train is still continuing on, and the revenue is not going to pace equally with the expense, probably for several quarters.
Maribel Lopez, always good to have you with us, founder and principal analyst at Lopez Research. And a reminder that subscribers can watch us live and see our past interviews on our interactive terminal function, TV Go. Join the conversation by sending us instant messages. And also, we'd like to hear from all of our viewers. So we've put together this short online survey. Scan the QR code on your screen right now. Tell us what you'd like to see more on Bloomberg Television and any other suggestions that you might have. This is Bloomberg. And now to the U.S. election race, where Donald Trump is insisting he's a clear front-runner and on pace for victory, setting the stage for outrage from his supporters if the election doesn't break in his favor. For more, let's bring in Bloomberg's Michael Shepard. Michael, I mean, how long could this drag on if we see a contested election?
Well, it's a great question, Shery, because we all know and remember from 2020 how it really dragged through early January that year, and it culminated in the Capitol insurrection when Donald Trump's supporters, in a last-ditch bid to try to overturn the election results and fueled by conspiracy theories that he, in fact, had won, they attempted to retake the Capitol by force and stop the process. So anything goes this year. We do know that the former president and his allies are really gearing up for a fight, especially if he loses. And they're trying to lay the groundwork now by suggesting that he's much further ahead in the polls and in early voting than he actually is.
One of the more colourful remarks we've heard from Donald Trump over the past few hours is talking about protecting women if re-elected, whether they like it or not. Can you share some more context on that and also the response from the Harris campaign?
Yes, and I'm glad you asked about that, Annabelle, because these comments from the former president really did take off today. What we have to do is look at how the two campaigns are approaching female voters in the closing stages of the race. You know, for the former president, he is trying to reach voters, women, on the level of security and crime. And he is using the argument that I will protect you, whether you like it or not, to use his words, from crime and from what he sees as migrants who are responsible for it, even though data show that they are no more responsible for it than any other demographic. The Harris campaign, on the other hand, sees in these remarks from the former president yet another opening to talk about abortion rights and access to reproductive care. These were limited by the Supreme Court that Donald Trump helped to put in place. Remember, he appointed 3 of the judges on the Supreme Court, the nation's highest court here, who ultimately overturned the 50-year Roe v. Wade standard. And on Tuesday night, during a national address from the Ellipse here in downtown Washington, the vice president turned to that moment, pointed to that as one of her arguments to women that I am here for you, and I hear you, and I understand and know that this is an important issue for you. The campaign officials for the Harris team are seeing stronger early voting turnout for women than for men, and they're interpreting that as an advantage to them, and they're hoping that they will be able to continue to play this point and card with female voters. It's a very tight race. It's neck and neck, including in our own Bloomberg Morning Consult poll of the swing states that will decide this election.
Michael, of course, we're just a few days away from the actual vote on November 5th. We do have early ballots in now. How are both candidates looking in battleground states?
Well, you know, it's very hard to tell from the early returns. We're not actually getting results out of those, but we can get a sense of who is turning out. And the former president is pointing to a stronger than the historical averages for Republicans in early voting. And remember, Donald Trump has never been a fan of mail-in voting or early voting. He has always said he likes people showing up on the day. But in a race as close as this one, he is opening his, expressing at least a little bit more openness to having voters use other means than just showing up on the day. And party officials are also backing him up on that. It is hard to say who is gaining an upper hand or an advantage from the early turnout. And we're going to only find that out once the election returns and results start coming in. And there's still a lot of voting and a lot of ballots to be cast in this race. And Tuesday night will carry into Wednesday morning and thereafter. We are not expecting an outcome to be declared, decided, or called for at least a day, if not longer, just given how close the race is and how contentious the voting count will likely be.
Yeah, Michael, something that could really stretch on for quite a period. But that was our senior editor there, Michael Shepherd, and we'll have more ahead on the Asia trade. This is Bloomberg. We're about an hour into the Aussie session so far and pretty much under pressure today. You've got the ASX 200 down 1% in early trade. We did, of course, see weakness overnight. Big tech results, more mixed numbers coming through, but that focus on Apple in particular and the weakness they're seeing in the Chinese market. The Aussie dollar, you can see there, just fractionally under pressure and, of course, keeping a close watch on what's happening in bond yields. We're seeing them just slipping bonds slightly. We're watching, of course, for the results of a 10-year auction due later today. But in terms of the stock market, actually, we're seeing the biggest weakness coming through in financials so far. And one of the main ones are watching shares of Macquarie Group because they're down nearly 5% after the bank's first half net income missed estimates. Let's get more on this now with Bloomberg's Paul Allen joining us for a closer look. And Paul, what exactly was it that saw this weakness in the results?
It was a reasonable performance from most of the units in Macquarie, but a couple of key ones, the commodities and global markets unit, both saw their profit contribution weaker. The commodities unit particularly because of lower commodities volatility. There was reduced credit also, which slowed down investment-related income for Macquarie Capital. Those tailwinds from deal making as well and energy shocks also abated to some extent. In terms of the headline numbers, though, they weren't too bad. There was a 14% increase in profit on year, net income just over $1 billion US. Interim dividend was also up a little bit to 260 Aussie, but the estimate was for closer to $3 there. The share buyback, meanwhile, that's been extended that was a buyback of up to $2 billion. That's been extended by 12 months. And asset management was a standout as well for Macquarie, so a 68% rise in profit there. So a mixed set of numbers, but yeah, we are seeing some declines for the stock today.
So what are they expecting for the second half?
Yeah, Macquarie typically doesn't provide specific guidance, but we do have a word, and the word is caution. So Macquarie says it's got a cautious stance, conservative approach to capital, funding and liquidity, although it does see deal activity starting to rise again as rates fall. We've got a bit more insight, though, from Bloomberg Intelligence. It's forecasting a possible 15% jump in profit in fiscal year 2025. That will be thanks to its diverse revenue streams in banking and asset management, and Bloomberg Intelligence predicting a possible further extension of that share buyback as well. We did see Macquarie shares hitting a record last month and pulled back a bit from that in the past week or so, but analysts still really like this stock. Got it at 6 buys, 5 holds, just 2 sells.
That was Paul Allen in Sydney there. And as we just mentioned, we're keeping a close watch on Aussie assets in the session so far. The Aussie bond actually a particular watch, given we've just seen the yield rising to its highest since November. Of course, the big action today in the session is going to come down to a 10-year auction that's taking place. So Australia planning to sell 800 million Aussie dollars. That's around 526 US of bonds that are due December 21, 2034. So that's the focus there. As we said, equities under pressure. Not only is that financials that are weighing, Macquarie in particular, but just broadly big tech earnings as well. And that feed across from Wall Street having its impact. But that focus on tech, also part of the corporate stories that we're tracking this morning as well, because OpenAI is adding a new set of search features to ChatGPT and its latest challenge to Google. ChatGPT search will allow users to look for information as they would on the web, with attribution from news publishers and other data sources. The service will go live beginning with paid users this week, while free customers will have to wait for a few months. Bloomberg's been told that Alphabet's autonomous driving unit Waymo is valued at more than $45 billion after its latest round of financing. Waymo said last week that it had raised $5.6 billion in new capital at an undisclosed valuation. The startup is part of Alphabet's Other Bets portfolio of businesses. Waymo is part of a large pack of companies pursuing robotaxi services in the US. Ford plans to shut down the Michigan factory that makes its F-150 Lightning plug-in pickup truck through the end of the year on weak EV demand. The automaker will begin the shutdown in mid-November, with plans to resume production in January. While Lightning sales are up this year, they're far short of Ford's expectations.
And some of the stocks that we'll be watching at the open in Korea and Japan. Apple's Asian suppliers in focus, of course, after the tech giants reported weaker sales in China than anticipated last quarter. We do have Apple falling almost 2% there in late trading. Although we are seeing those gains for Amazon and Intel. Keep an eye on Asian suppliers for Intel because, as we mentioned, the chip maker gave a fourth quarter revenue forecast slightly above estimates. And, of course, perhaps reclaiming some lost market share. That's sort of the optimism that we're seeing from investors. As Pat Gelsinger has called this the most audacious rebuilding plan in corporate history for his company. Market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after some pressure in the overnight session on Wall Street. The Fed's preferred gauge of inflation at the biggest level and the biggest gain since April. And that bell really leading investors to think that perhaps the Fed won't be able to aggressively ease. In the late trading session, a bit of a different picture.
Yeah, it's really been that focus on big tech coming through. We had numbers out from Alphabet, or rather Apple, Intel, Amazon, all really just telling different themes because it has been that story of divergence as well coming across the week.
Yeah, we'll see how the tech sector here in Asia also opens. Of course, we have seen already big moves in the currency space with the Japanese yen surging as much as 1% at one point. Still, we're talking about that downside pressure that's plagued the Japanese yen for quite a while. We had a little bit of that surge because of the Bank of Japan really not doing much in the previous session. But at the same time, Governor Ueda talking about how the political uncertainty here in Japan would not stop him from hiking rates if his forecast actually unfold. So you're seeing the yen at that 151.93 level. A little bit of pressure for the Nikkei and the topics as well as we continue to, of course, watch the tech sector and those tech names. Asian suppliers will be key in today's trading. But take a look at how Korea is coming online. Of course, another tech-heavy economy. South Korea's October exports right now rising 4.6% year-on-year. Imports rising 1.7% year-on-year. That's left a trade surplus at around $3.2 billion, a little bit below what analysts had expected. But at the same time, of course, we continue to see very strong shipments of chips from South Korea. So that export number really giving you sort of a picture when it comes to the broader global demand in the tech sector. The Kospi continues its downside 0.7%. We had some falls in the previous session. The Korean won strengthening a little bit, but really, Korean won has been trading in a narrow range, given that, of course, we have a lot of big events coming up, including the U.S. elections at the FOMC next week.
Yeah, that's right. I mean, this week seemed busy, but next week perhaps could really blow it out of the water. But today in the session, it's still that focus on earnings coming through and the Apple numbers in particular, because these are some of the supplies to the business. And you can see here mostly under pressure. TDK as yet untraded, but of course that could actually indicate we're going to see it open to the downside. The focus on Apple, because actually iPhone sales held up and surprisingly well in the third quarter ahead of the holiday season. But it was the China weakness, and that was really what led to that stock falling in late trade. But let's get more on this and bring in Ken Wong. He's Asian equity portfolio specialist at Eastspring Investments. And Ken, how do you think about this? Because perhaps we're at a point where some companies haven't really factored in that China risk just yet, that ones that are quite dependent on China for sales could actually face not just a weaker consumer, but really rising competition from local brands.
Yeah, I think that given where share prices have gone, the fact is that there's been a lot of expectations for very strong growth. But the fact is that, right now in China, we still have an overall consumer sentiment, which remains still, I would say, fairly weak, right? This is one of the main reasons why, there's a lot of policies being implemented and being introduced by the central government, is to really help pick up, overall consumption, because it has been lagging quite a bit. And now we are seeing that in terms of some of the numbers from some of the tech companies to show that, hey, weakness doesn't just impact the overall domestic economy, but it also impacts a lot of the global suppliers who are actually trying to import and have more goods sold in China.
And so, of course, we mentioned that there's the U.S. election coming up, but next week is going to also be a big meeting for policymakers in China, and we've got tech earnings on the horizon as well. So how are you looking at trading in this market?
Yeah, I think it's very, we have to be very careful. The fact is that, with a lot of big events next week, as you mentioned earlier, there's a lot everybody's trying to price in. You have the U.S. elections with how everyone's trying to price in, whether Trump or Harris is going to win. Then, of course, you have the big meeting in China. So hopefully, and everyone's expecting for further policies to be announced to really continue that momentum that we've been seeing in the Chinese stock marketplace for the past 6 weeks or so. And of course, I think, like you mentioned earlier, you got a lot of big Chinese tech companies like Tencent, Baba, JD.com, all reporting Q3 numbers as well. So it's going to be very important. I think, for some of the investors who are actually quite keen in terms of looking for stocks which are trading well below their intrinsic value, where the markets potentially have a bit of a, sort of lower expectations, those are companies potentially to look at, because we could potentially see, modest surprises in a few companies next week in terms of providing, maybe results a little bit better than expected.
Ken, when it comes to the U.S. elections and what we can expect from Donald Trump, are the markets becoming a little bit more immune to his tariff talk? I mean, remember what happened in 2016? Anytime you would talk about tariffs, you'll see this huge market swings. It doesn't seem like we're getting that as of yet. Could we be a little bit safer, even if we get more of this, depending on the outcome of November 5th?
Yeah, I think the notion is potentially history not repeating itself. I think maybe some investors are, trying to bank on that. And again, we don't know, whether it be Trump or Harris is going to win the elections next week. I think it's going to be more important to see, post-elections, especially around policies, how are things going to be impacted? Because either candidate really haven't had a lot of very specific details when it comes to policies in terms of potentially how it could impact, sort of the various countries here in Asia and also in China in particular. So I think a lot of investors are trying to speculate on certain things, but ultimately I think, they're trying to still figure out who's going to win the elections next Tuesday. And then from there to hopefully see potentially what type of policies could have an impact to this part of the world.
Yeah, and on top of that, we have China's top legislative body, the NPC Standing Committee, also meeting next week. How closely are you watching some specific policies coming out of Beijing that could affect your investments?
Yeah, it's going to be very important because, a lot of times, post-MPC, we might get tidbits here and there. But realistically, we're not expecting a whole lot, to be announced within the next week or so. But it's over the next few weeks, specifically waiting to see, I would say, to counter potentially, who's going to win the elections in the U.S. Then also at the same time, once there's 5-6 weeks of data that, the markets are seeing, then potentially to see whether or not and what type of policies need to be had in order to help compensate. Remember, the fact is that China still does have this GDP target of close to around 5%. So if we're not near that, then potentially you could see quite a bit more policies being implemented. And also, we're right now sort of in that stage where I think investors right now are really still taking a bit of a wait-and-see approach to see what further policies that we can actually see in China to really see whether or not we can have this more sustainable rally in the Chinese equity markets, in the foreseeable future.
Are you getting are you going any closer to? Are we getting any closer to potentially investing in the real estate sector in China if we continue to see these policies that could be more supportive toward property markets?
We're not really there yet. And I think it's just that if you look at the real estate sector in China, over the past few weeks, you've had, a few trading days. For instance, yesterday, you had a very strong trading day for Chinese property companies. And then, a few days prior to that, you have weaknesses. So it's very volatile at the moment. In order for us to really see things really, I would say, move further ahead, we really do need to see where that demand is going to come from. There's plenty of supply that's out there. Prices have fallen to a standpoint where it is becoming more attractive. But with that said, it is going to be very important to see how specifically that demand will pick up. So it's going to be further policies, whether it be further reductions in interest rates, further loosening policies, additional policies that's needed in order to really push up demand. And this is what we're waiting to see, what further announcements will be made, especially around the tier 2 and tier 3 cities where, volume and overall prices are still, I would say, at, below expected levels, actually.
What else we're sort of waiting to see is the direction that the Fed takes.
Yes.
It does seem at this point that the outlook for sort of steeper cuts into next year is coming off the table for now. What does that mean in terms of the outlook for Asian equities in turn?
That's really difficult. The fact is that if the U.S. dollar starts to have a bit more of the strengthening again, like what we've been seeing over the past couple of weeks, that does tend to actually coincide with Asian equity markets, having a weaker, potential. The fact is that if you look at overall dollar relationships with the Asian stock market, anytime when the dollar strengthens, Asian stock markets tend to actually not perform. And anytime when the dollar actually weakens quite a bit, you do actually start to see quite a bit of strong performances in the Asian equity market. So the fact is that if expectations now are that the Fed might not be lowering interest rates as much as previously expected, that could have a negative impact towards Asian equity markets. So investors definitely do need to be careful as to how to position their portfolios, especially right now where we do have this uncertainty right now with what the Fed's going to do.
Yeah, certainly it could cast quite a shadow. And actually, just to mention there, the Nikkei down 2% in the early trade. But that was Ken Wong, Asian equity portfolio specialist at Eastspring Investments. And we'll have more ahead on the Asia trade. This is Bloomberg.
iPhone grew in every geographic segment, marking a new September quarter revenue record for the category. And services set an all-time revenue record, up 12% year over year. We also set September quarter segment revenue records in the Americas, Europe, and the rest of Asia Pacific, as well as in a large number of countries.
That was the Apple CEO, Tim Cook, there speaking during the company's fourth quarter earnings call. And, of course, very impressive numbers, really, for parts of Apple's business. In fact, we just had a guest in the last hour, Maribel Lopez, saying that Apple really pulled the rabbit out of the hat on this one, given it was a strong quarter for sales ahead of the Christmas period or holiday season. But what did really stand out and what wasn't mentioned there was the sales for the China market in particular. And this really casts a shadow because Apple is facing very intense competition locally from the likes of Huawei, Xiaomi, Oppo, among others, who are eating into their market share. So that stock there, really one of the key watches. What else we're tracking is Amazon here, because that company also forecasts a strong holiday shopping period. Talking as well about the demand for their cloud services. And again, across the week, we had strong results from Alphabet in this space. Microsoft as well, even though they didn't actually have a forecast that meet estimates in this area, it wasn't about the demand side. It was more about the capacity. So that stock there rising 6% in late trade, and that watch on Intel in particular, given we've had Pat Gelsinger talking about what is an extremely ambitious turnaround plan for the business. Let's change on and just take a look at some Intel supplies in this region. It's not just the focus, of course, on what happens with their chip design business. We are also talking about that, but also what they're doing with their foundry business, trying to build out that, getting some customers. Actually, AWS was one of them in the period. But this is the outlook for some of the major chip companies in Asia, pretty much under pressure here across the board. But let's get more from Intel CEO Pat Gelsinger, saying that their uptake of their AI accelerator has been slower than they hoped, and that's due to software issues. He told us more about what he calls the most audacious rebuilding plan in corporate history.
We worked very hard this quarter to get this done, and the people actions, the restructuring charges, largely finished this quarter. So it was a challenging quarter that way, but to also deliver better than expected results if we eliminate those one-time charges, and to take our guidance up for Q4. I'm very proud of our team being able to do both of those this quarter. Some of the most difficult restructuring charges maybe in the history of Intel since our memory microprocessor decision almost 40 years ago. Getting that done and still beating results and taking the guide up.
Away from sort of the financials and numbers, could you talk a little bit about the product business and the foundry business that gave you some confidence in that guide?
Yeah, and if we take it apart a little bit, the client business, we've launched our Lunar Lake product, the second generation of our AI PC. And the AI PC category, very solid. We'll be launching the commercial version of that into a good market, we believe, next year for a Windows refresh, a corporate refresh cycle, and we start to see more strength in the AI PC category overall, with strong set of use cases and ISVs bringing new software into the marketplace. So we feel good about the client business. Data center, quarter on quarter, a little bit better than people forecast for that business, and a stronger product line with our Xeon 6 products now starting to ramp. And finally, on the Intel Foundry, quarter-on-quarter growth in that area, and a strong pipeline of external customers. We announced Amazon and 2 other 18A customers, some additional advanced packaging customers. So we're starting to see that business come to life.
Your AI accelerator did not get the traction that you'd hoped, and you won't be making the outline target of $500 million in sales for this fiscal year or calendar year. Why? Is it a use case issue that the data center operators aren't looking at it, or something else?
Yeah, 2 factors that we pointed out. One is that now we have Gaudi 3 coming out, so there's more enthusiasm for the next generation product that we're just starting to ramp now. The second one is the software. And the software use cases, the AI world has moved very rapidly and innovating very quickly. And the robustness and the completeness of the Gaudi software stack hasn't been as great. And it's an accelerator, not a full reprogrammable GPU. So that makes some of the software porting and optimizations a bit more difficult. Obviously, as we get more of that running on Gaudi, we solve the software problems. Okay. But secondly, then, it's also to move to a complete GPU capability, which we'll be doing out in time. And that development effort is also well underway. So we feel we have a solid position.
Bloomberg's reported that ARM and Qualcomm, 2 of your peers, are interested in buying some or part of Intel. Can you confirm whether or not you received a formal offer?
Obviously, there's been rumors and churn in the industry, and I think all of that just indicates how important Intel is to the industry structure and semiconductors, and how important those supply chains are, for the world. We don't view any of these rumors as particularly meritorious. We, laid out a strategy. We reaffirmed that with our board of directors, and obviously, as we've taken these steps this quarter and restructuring and getting our costs where they need to be, we have the capacity to go on the journey that we've laid out, to produce sustainable profitability and result in shareholder return.
Intel CEO Pat Gelsinger speaking with Bloomberg Technology co-anchor Ed Ludlow. Bloomberg senior executive editor in technology Tom Giles joins us now for more not only on Intel but also Apple's results. Tom, let me start with Intel. How much of this in the late trading session was really a relief rally, and how convincing was Gelsinger's guidance on the future of its business?
Yeah, people came into this quarter for Intel with really low expectations. They have made a lot of news in recent weeks, the layoffs, holding off on their dividend, delaying plans to ramp up production to build fabs in parts of Europe. These were all negative signs for Intel, and we've seen their stock under a lot of pressure. So coming into this quarter, expectations were really pretty low. The concern is that they have fallen behind in AI. They've fallen behind in the production of the most advanced chips. They've made this announcement about becoming a foundry business. They're looking at ways to strategically, get out of businesses that are not strategic to them. And the concern is that, Intel's in trouble. You've got, we've reported, others have reported interest from outside companies. This is a company that was for many years at the pinnacle of global chip making, the top of the chip making industry, and they've really fallen. They're a fraction of what they used to be, and people are really looking for them to come from behind in artificial intelligence. They really want to see what's going to happen with this foundry business. Can they build factories that will make them an actual manufacturer of chips and not just a designer of the chips? Those are really big asks, are really ambitious, and Pat Gelsinger spoke to that. It's audacious, and it's going to take a lot of time. So yeah, when they come out with results like the ones that they did today that show that, okay, there are at least some signs of hope, that's where the relief is coming from. But Intel is by no means out of the woods.
Tom, let's talk about Apple and the weakness in China. Do you think that if they manage to, say, find an AI partner like Baidu, for instance, in the country, that could spike a bit of demand for its products? Or do you think that there's something deeper at play in that changing preference that we're seeing for homegrown giants like Huawei or Oppo or Xiaomi? Mm-hmm. What can Apple do here? And do you think that has fully been appreciated in the stock price just yet?
Well, you raise a really good question, and I want to start on the AI question. So here in the U.S., they've announced a partnership with OpenAI where they're going to incorporate more artificial intelligence into the software, into the smartphone, give you more reasons to keep and buy iPhones, which is, of course, their flagship product. They've only trickled out a few of those ingredients thus far, so we really don't know what that's going to look like. They've announced grand, ambitious plans, but they've only introduced a very small percentage, a sliver of those AI capabilities in the phone. So once we start to see that, I think you're going to see what the potential could be if you were able to partner with, say, a Baidu in China. I think that could generate a lot of excitement around the iPhone. Again, it's just so unproven as of yet. Now, on your other question, competition in China is real. We're seeing phones from Huawei that people are really into, and you see competition from Oppo, Vivo, Xiaomi, and the list goes on. And so China's a very competitive market, and remember, there is a political environment that can't be underestimated. There's tension between the U.S. and China. We might elect a president in a couple of days who wants to erect these massive trade barriers with China. We don't know how effective he will be in that. However, if you ratchet up tension with China, the question becomes, do they retaliate, and what is the impact on the big U.S. companies like Apple that are still able to operate in China? They're making their phones there, they're manufacturing the phones there, and they're also selling phones into the market. Does the market there start to think, I don't know if I really want to buy these American products at a time when the U.S. is ratcheting up pressure on this country? So it's a combination of things that I think are really raising questions about Apple's future in China.
Tom, how concerning is it then, given all of these challenges, that other divisions have also sort of fallen short of estimates, iPads, also their wearables division, and of course, although services came broadly in line with estimates, I mean, they have so much competition in that segment as well.
I mean, Tim Cook pointed to other areas of strength. There was a record quarter for iPhone in general. Now, they only had a few weeks of the iPhone 16. We'll see more of that in the year-end holiday season, which is obviously very vital to them. That's when there's a lot of gift giving and gift buying, and so we'll see whether iPhone 16 has the ingredients that consumers are looking for. I look at some of the results that came out of Apple at the end of this most recent quarter, and I think there's cause for optimism. There had been questions about whether iPhone 16 was a game-changing more device or more evolutionary versus revolutionary, and the early reviews have been sort of mixed and sort of feeling like, yeah, it's good, but it's not a super game changer when it comes to new features and new capabilities. So it really remains to be seen once we get a full quarter of iPhone 16 sales, and once we start to see more of those AI capabilities through that partnership with OpenAI woven into the iPhone. Does that generate excitement? Does that get people coming out and buying more iPhones for the holiday season? A lot's riding on it. But when you look at China, they did not issue a super optimistic forecast for that quarter.
Our senior executive editor in technology, Tom Giles, there joining us in San Francisco with big tech earnings. We also have lots of earnings here in Japan. Panasonic rallying right now after their second quarter operating profit beat estimates. A lot of downside for SoftBank. They report results later in the month, but we saw that their majority stake in ARM, right? They have slumped overnight. Bernstein lowered their view on ARM, so we're seeing the downside of more than 4%. This is Bloomberg.
Checking in on how futures in Europe are opening this morning, and we are just seeing them moving fractionally higher here, but put it in the context of yesterday's trading, because actually we saw European stocks slipping for a third straight session, led by retail and tech stocks, all sectors though in the red. And thinking about the month in aggregate, it was the worst monthly drop in a year for European equities. Disappointing corporate earnings coming through. Focus on the UK as well, given we had concerns about the government's budget, and that sent bonds tumbling. But essentially the Labour government, they're looking at vast borrowing, they're looking at fiscal stimulus as well over the coming years. So concerns about that feeding through, but we'll have more ahead on the Asia trade. This is Bloomberg.
Take a look at how we're looking in the early Asian trading session. The Nikkei at one point losing more than 2%. A lot to do with the strength of the Japanese yen, although we're holding steady at that 152 level. Overnight, we saw a jump of as much as 1% at one point. Given some of the comments that we got from BOJ Governor Ueda talking about how the current political situation in Japan wouldn't stop him from hiking rates if prices come in line with forecasts. The Kospi also losing about 0.25%, continuing to trade in a narrow range. A lot of big events, of course, coming up next week, including the U.S. election. The ASX 200 down about 1%. Do keep an eye on those miners and commodity stocks. Take a look at oil at the moment. We saw a big jump overnight on a report that Iran is planning a fresh attack on Israel. But right now, Brent continuing those gains. Right now, about 2% higher, $74 a barrel. And we continue to watch the metal space as well. Of course, this on concerns about China's economy. We do have the NPC top legislative body meeting as well next week, Belle.
Yeah, and Shery, of course, just marking some PMI data that's dropped across Asia today. And what we're seeing is some pretty interesting readings coming through. So you can see here that actually most of them across the border in contractionary territory and staying in that. But there has been a modest improvement in some parts. Only Taiwan and Thailand, a slight deterioration. But the others are seeing, and Japan actually, but the others seeing some improvement coming through, or at least a steadiness. It's interesting off the back of China's PMI data as well, because we had those official figures for October coming out, and we saw the manufacturing sector expanding on a monthly basis for the first time since April, and the non-manufacturing sector also back above that key 50 line. So it does appear, at least in China, that the early signs of the policy impact are emerging. The key question, of course, is when that starts to translate into its biggest partners in this part of the world as well.
And of course, we continue to watch and count down to Election Day in the U.S. We only have 5 days to go. The presidential candidates now ramping up their messaging to draw in any undecided voter and mobilize their supporters to cast early ballots. Republican Donald Trump and his allies are telling supporters that they're on pace for a runaway victory, barring fraud that's setting the stage for outrage and legal challenges if the election doesn't break in his favor. In reality, most polls have the candidates essentially tied, with some models showing a slight Trump advantage. Earlier Thursday, Democrat Kamala Harris seized on Trump's comments that he would, quote, protect women if elected, whether they like it or not.
It actually is, I think, very offensive to women in terms of not understanding their agency, their authority, their right, and their ability to make decisions about their own lives, including their own bodies. He is not going to be fighting for women's reproductive rights. He does not prioritize the freedom of women and the intelligence of women to make decisions about their own lives and bodies.
Bloomberg has been modeling what both candidates' policies could mean for growth, inflation, and debt in the U.S. Bloomberg Economics has crunched the numbers on the impact of Trump's proposal to raise tariffs on Chinese imports to 60% and on all other partners to 20%. He's claimed the U.S. could be taking in, quote, trillions of dollars. But Bloomberg Economics says Trump's new tariff war could mean annual revenue of up to $400 billion. Well, that's much higher than the $83 billion collected in 2023. It's well short of the promised trillions. Let's bring in Anna Ashton, founder of consultancy firm Ashton Analytics. Anna, great to have you with us. Should we be ready and prepared for trade wars on different fronts should Donald Trump be elected?
Thanks for having me, Shery and Annabelle. And yes, I think the bottom line is that we should be ready and prepared for trade wars should Donald Trump get reelected. And frankly, you know, we should be ready and prepared for tariffs to at least stay in place for the most part for a while if Harris is elected too. But clearly, Trump is a bigger fan of tariffs than Harris is. She talks about them as raising taxes on American workers. He talks about them as, you know, the way to justify and pay for massive tax cuts. So I do think that the approaches will be a little bit different.
Yeah, when it comes to specifically the relationship with China, it seems both Republicans and Democrats are on the same page on that one. What can we expect in terms of more action against Beijing, either from Kamala Harris or Donald Trump?
You know, they are on the same page, Shery, in the sense that, you know, both sides see China as the primary competitor of the United States and possibly or already the United States' primary adversary. But there are some differences in how each side and each presidential candidate would prioritize issues and approach issues. You know, I think that with Harris, it's pretty clear that she will continue something like the Biden administration's approach, which means that there will be a lot of diplomatic engagement, not necessarily to reach any sort of agreement, but to make sure that the two sides understand each other, know each other's red lines and bottom lines and priorities, and nothing is surprising. Nothing throws the relationship into a spiral. With the Trump administration, I think, you know, we're likely to see less talk, more action. The Trump camp has always emphasized that the most important engagement is really at the leader level, and there doesn't need to be all of this diplomatic engagement at the agency or ministry level. And that may diminish the extent to which the United States understands China's motivations and policies and vice versa. On the other hand, if it is a good rapport that is established between Trump and Xi Jinping, then perhaps, you know, they will have a more effective, more reliable hotline to each other, and that could also help to prevent calamitous developments.
Of course, it's a two-way street, Anna. So it's not just about, of course, how the U.S. approaches China, but how do you think China is looking at these two candidates and the way that they're going to look to engage with them as well?
Gosh, I mean, that's a really good point, Annabelle. And I think that neither of these two candidates is China's ideal. With Trump, there is the slim possibility, anyway, that he would view the United States relationship with Taiwan as more transactional. You can imagine a scenario where, because he doesn't want to spend a lot of American treasure on deploying forces abroad or fighting wars, he decides that he's not particularly interested in continuing to supply Taiwan with arms to defend itself unless Taiwan pays a lot more. He suggested something to that effect. You could imagine him potentially treating Taiwan and the relationship with Taiwan as a transactional issue. And if Beijing were to offer the right mix of things in return, perhaps deciding to pledge that the United States would not intervene in the event of a Chinese invasion or attack. I don't think that he has many advisors who would suggest that that's the right way to go, but he himself has indicated that he may be thinking along those lines. With Harris, I don't think that is remotely in the mix. But on the other hand, there's the certainty that she will continue to view China as a competitor, that she will want to engage with China in order to ensure clear communication. So it will be a difficult relationship, an uphill relationship, but a relationship that likely can be managed by both sides.
That sort of guarantee from Trump, if it ever did eventuate, would be a very dramatic shift in policy, because there has been that long-held security guarantee, even if it's not explicit military support. But how do you think sort of that also plays into the question around support for Ukraine in terms of assistance as well?
That's a really interesting factor, too, because on the one hand, I think most people expect that if there is a second Trump presidency, there will be less U.S. support for Ukraine, because Trump has indicated as much, and because, there are defense advisors to the Trump campaign who see Ukraine as focusing the United States military attention in too many places at once. They really think that the Pacific theater is where the focus should be. So if the United States were free of the burden of supporting Ukraine from the Trump perspective, then, perhaps that would mean that the United States could ramp up its presence in the Pacific to more effectively deter a Chinese invasion of Taiwan. But again, it doesn't seem that Trump is necessarily particularly interested in positioning the United States for a war over Taiwan. So just because a Trump administration might pull back from supporting Ukraine doesn't mean that it would result in a tougher United States presence in the Pacific.
And Anna, this week we just saw North Korea also fire an intercontinental ballistic missile. Where will this relationship head depending on whether we get Trump or Harris?
I certainly think that Trump will want to capture the stage as the U.S. president who is willing to negotiate with North Korea and engage with North Korea and try to reach agreement with North Korea. But that's one where, again, I think, as Annabelle pointed out about China, there are two sides to this story, and how North Korea reacts is a major factor in whether or not that actually works or leads to any sort of improvement in the relationship or stability on the Korean Peninsula.
That was Anna Ashton there, founder at Ashton Analytics. Thanks so much for your insights this evening. And a quick check on what we're seeing in terms of the FX positioning around the election next week. Of course, it's a big meeting week for Chinese policymakers as well. But this taking a look at Yuan volatility, and it is spiking here. The implied gauge actually at the highest level we've ever seen ahead of that vote taking place. So something to track very closely as we see the offshore yuan there around 7.1. And of course, what else we're tracking is the pile of FX reserves in Asia, because that's now at $6.4 trillion. It's really giving investors confidence that central banks have the ammunition to fight the dollar's strength. For more, let's bring in our economy reporter, Swati Pandey, joining us now. And Swati, just talk us more about this sort of dollar shield and the dynamics around it.
We have had this situation before in recent months where Asian currencies were falling and the central banks, local central banks had to intervene using their forex reserves. And the expectation is that that is going to happen again as these Asian currencies are again being hit. A Bloomberg index shows that this Asian currency index, the region's currencies, they have had their worst month since February 2023. Indian rupee is near its weakest ever, and South Korea's won is close to 3-month low. But then the forex pile that the central banks have has also increased to $6.4 trillion. This is ex-Japan, and that compares with $6.2 trillion at the end of 2023. So there is that growing confidence that central banks are in pole position to defend their currencies and smooth volatility in the run-up to this U.S. election.
And we've already heard quite a bit from different authorities around Asia, right, trying to at least verbally defend their currencies.
That is true. They are definitely trying to do that as well. Their options are limited. So it looks like having this big pile of forex reserve is their first line of defense. Obviously, it's easier and better to go with the rhetoric. But sometimes rhetoric doesn't always help, especially when your currencies are getting knocked out badly. So in a situation where so markets are pricing for a Trump win, right? And if that does happen, strategists are expecting further pressure on Asian currencies, even though the outcome is priced in. So if that does happen, we will see further sell-off. And in such a situation, rhetoric may not work.
Our economy reporter Swati Pandey there. And a reminder that subscribers can watch us live and see our past interviews on our interactive terminal function, TV Go. Join the conversation by sending us instant messages. And we'd also like to hear from all of our viewers. So we've put together a short online survey. Scan the QR code on your screen right now. Tell us what you'd like to see more of on Bloomberg Television, and also any other suggestions that you may have. More ahead on the Asia Trade. This is Bloomberg.
Boeing shares jumped in late trade as the union representing 33,000 striking workers reached a tentative agreement to end their dispute. Our transport reporter Danny Lee joins us now, and it's really just the latest attempt to try and end the labour strife. But do you think we're any closer now to an agreement?
I think the overall proposal, it takes the effective pay rise that the unions demand to around 43%, and that's more than what the 40% they originally wanted when they went on strike. So this is a big step forward, a big moment. We are closer than ever before, and this is significant for Boeing to settle the strike, several weeks on from this damaging, costly strike. So it's an important one, and given where we stood in the last vote, which got shot down, this could really put Boeing over the line here, so it's significant.
What are the risks, though, that it falls apart?
Yeah, the risk is it falls apart again, which would be unexpected. And since this vote will take place on Tuesday, a day before, we will know the vote by Tuesday, the day before the US elections come through here in Asia. And so if that happens, the fact is, with a new administration, potentially the risk of that, this, and the union has warned, this is the best you might get, frankly. So, the pressure on both sides to vote this through.
Our Bloomberg transport reporter Danny Lee there. Now, scandals are mounting on Nomura, threatening to derail a turnaround plan at Japan's biggest brokerage. Senior managers will take a pay cut after admitting an employee manipulated the bond market. And now a local news agency says a former worker has been arrested on suspicion of robbery, attempted murder, and arson. Asia Investing editor Russell Ward joins us now in Tokyo with the latest on Nomura. We have earnings, but at the same time, all of these other things happening. I mean, this is a huge reputational hit.
Absolutely, Shery. The timing couldn't be worse. I mean, just as Nomura was trying to put a line under this market manipulation scandal with agreeing for top executives to take pay cuts, within an hour, local media reported that this former employee, who was actually employed at Nomura at the time, according to the report, invaded or went to a home of an elderly couple in Hiroshima who were clients of Nomura, and drugged them and stole their money. I think he stole about $171,000 and then set the place on fire. So this is extremely disturbing revelations, and it couldn't come at a worse time, just when Nomura is trying to put a line under this market manipulation scandal and report earnings and sort of go forward.
And it's just the broader image that they're trying to overcome, right? That they're prone to these missteps, to these scandals.
That's right, and you have to bear in mind too that this happened, according to the report, while the person was an employee of Nomura. So he was, dealing with Nomura clients. So this is potentially a huge breach of trust. This is, a business. The classic business for Japanese brokerages is to deal face to face with retail clients. They earn a lot of money from that. It's a very stable part of their business, and this is the time when Japanese investors or people are trying to, look towards investing more of their savings. And for this to be happening now, these revelations to be happening now, the timing couldn't be worse for Nomura.
So should we get to earnings?
Yeah, that's right. I mean, putting that aside, actually Nomura probably will report a solid quarter of earnings. We're expecting, or analysts are expecting, profit to grow 79% from a year earlier. That would be a third straight quarter of profit growth. But really, I think those earnings are being overshadowed by these other events. And the CFO is going to be questioned about that, undoubtedly, at the briefing this afternoon. And the big thing for investors, I think, will be to, figure out what's going to happen to Nomura next. The bank has lost business from the market manipulation scandal from bond investors and bond issuers, and now we've got these fresh revelations. So we'll just have to see what the future holds for Nomura.
Our Asian investing editor Russell Ward there as we gear up towards those results. And of course, we have lots of earnings out of Japan this week, including Fujitsu. It's cut its fiscal year operating income forecast. They've also missed estimates, so you can see the downside of more than 9%. We also have Renaissance, a big move, the most in 8 weeks. Trading volumes are tripling at the moment. Of course, we have a lot of movement overall right now in Japan's trading session, with the Nikkei down more than 1.5%. Panasonic, a little bit brighter in this stock. Shares rising after the second quarter operating profit beat estimates. We have more ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade, and we're all about big tech and after hours, after big earnings really coming through, and it was some pretty mixed results. I mean, taking a look at some of the share price reaction today, you've got Apple under pressure there. You can see, yes, we actually saw Apple iPhone sales pretty strong in a lot of parts of the world, but it was that focus on China in particular and that pressure they're seeing in the mainland market and perhaps losing market share there. So that stock there, you can see down nearly 2%. Amazon as well. Of course, it really was that focus on the e-commerce division. We've really tracked the AWS side, but e-commerce indicating strong holiday sales ahead. That stock up nearly 6%. And of course, saying that AWS is still doing well. So echoing what we heard from Alphabet, for instance, early this week. Intel, I mean, look at that jump you've got there, up 7%, up as much as 12% at some points. But Pat Gelsinger, I mean, Shery, he has got such a tough job with that restructuring effort. But finally, after months of pain, it does seem to be paying some dividends. We're seeing that focus on Intel supplies in the session so far, but actually it's weakness across the board here today. We've got tech, really one of the big drags. You've got laser tech there. Look at that drop, down nearly 17% at this point in time. So clearly could end up casting a bit of a shadow over global investor sentiment.
Yeah, tech actually the biggest loser on the Nikkei right now, down more than 3%. Energy is the only sector that's gaining ground, not only in Japan, but also in Australia. This, of course, as we had oil jumping on that report that Iran is planning a fresh attack on Israel. But looking ahead, of course, it's all really about China. We did have the offshore yuan. I think it's worst monthly drop in more than a year. Take a look at how futures are trading as we're headed towards not only the China NPC Standing Committee meeting next week, but of course, we're setting up for the U.S. elections, the FOMC as well. A50 futures really didn't do much and they closed, but U.S. futures now gaining about 0.1%. But you can see the tech-heavy TAIEX right now losing more than 2%. That's it from the Asia trade. Our markets coverage continues. The China show is next. This is Bloomberg.